Hello, hello. This is my first ever YouTube video. We're just going to be going over what I see in price right now. So on the daily chart, we'll start here. Made a high, and then entered what? Consolidation. And then what does it do? Manipulates past all these equal highs. This fair value gap was like almost guaranteed to get hit. Because I saw this as a very bearish formation of price. The first thing I noticed that created this mindset in me was this giant wick down, or giant body down. That indicates price wanted to go lower. Here, it only means wanted to sweep liquidity, take out all the buyers who entered along this leg and this leg. We're going to take profit at as high as they wanted to, because they saw this as bullish. I gotta enter here, and then boom, it knocks them out real quick, real fast, one day. And everybody who put their stop losses here, which is a liquidity pool, buy side or sell side liquidity pool, which means there's buy stops below here, which means institutions are buying below here, and they're taking it to what? This high right here. If you look closely, you'll see, well, is that a swing high? Let's see. Close comes in at 814. Open comes in at 814. I mean, it is a swing high with wicks, but I was looking at if the bodies made a swing high. So it is a swing high here. This is where lots of people are going to take profit. And I want you to notice how it goes up right to this point here, right to these two wicks, and it doesn't even leave a body in those wicks. It just tags it real quick right here, and that means, and that indicates a move to knock out the buyers, the late buyers who bought in this candle. Everybody else is safe here. Safe. Not safe. Takes them out, and it runs real fast, makes a giant gap. Not a giant gap, but a pretty decent gap. New week opening gap here. And it runs higher. And I looked at this and I was like, it could just be a way to knock out buyers. But I more just thought of it as preparation for selling big. Because if they're knocking out buyers are going to want to get back in. So it's confusing in here. This is consolidation. It's confusing here. You're like, well, it didn't take out this high. Does that mean it's going to go lower? And it honestly could have meant that. This could have been the start of the sell-off. But in reality, all it meant was it's not going to get taken out yet. This scared you if you're a buyer. But to me, this is an entry location for buys at the bottom of here, inside of this breaker. I'd try to get as close to the midpoint as possible. After it breaks out of this breaker, after it breaks out, closes above it, closes above the body, I mean. I'm looking to get as close to here as possible. And I don't have enough data. Like, I don't have the premium subscription where you can go back that far. So I can't show you on the daily chart or on the 1 minute chart. But I assume there would have been something good in here. And this is a swing high. None of these are swing highs, but this is a swing high. So you'd want to grade this wick. And look at where that body is, or that wick is. Just below there. So it tapped into this body. It went real far here. But see how we only close just below the midpoint? And after a close above, I don't want to see it go to the lower half again. I'm sure there was entries on this, maybe a breaker or something, that lined up exactly with this line. I'm sure there's entries here, 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 all the 8th levels, there's going to be entries. And you could just do a little move from this high. Well, this would be your target at 25,852. Let's just say you got an entry here. That's 420 points. That's a lot of money. Just assuming, I mean, it's kind of hard before it breaks out of this range. It's kind of hard to decide where you should take profit on these big moves up when you're at all-time highs. But then it created this. Big wick, small body. It means they brought it up, and they brought it back down. Or they brought it down, brought it up, and brought it back down, indicating weakness. And then they brought it down probably. They brought it back up, and they brought it down. Small body, see that? That indicates indecision in the market. It's basically a flag that something's changing. And then you see this pretty decent body down. You see this one last try to get up there. And I don't think we even got past this wick. We didn't. So this wick stayed, couldn't even take out daily highs. It got close, but it didn't even take it out. And then what happens? Here we're taking out daily high taken out, daily high taken out, daily high taken out, daily high taken out. And then this. And then failure to hit that daily high. It moves down. Where's it going? This is a big move down. Where's it going? This new week opening gap. Which is also, I figured this out. I couldn't tell at first, but then I noticed suspension block. I think. Or maybe it was this one, suspension block. So let's delete all this. This really doesn't matter anymore. Past that. Suspension block. And new week opening gap. So we tag into the new week opening gap. We probably faked going lower. See how it didn't reach that yet? Means it's not happening yet. Goes up, creates this fair value gap, which will be used much later. Failure to get to this high, failure to get to this midpoint probably. Well, the body didn't get to there, so it tapped this midpoint. And then the next day, failure to get there, taps the midpoint, and then big rejection right into this breaker. And the bodies, they stay inside this. But the wicks, they take out this liquidity. Now it's getting a little messy, so let's just delete everything off here. Well, we can keep that. So liquidity sweep, what happens after a big daily liquidity sweep? Moves up. Where does it go? Takes out this high. It's a short-term high taken out, which we can expect after a liquidity sweep of this size. This is the daily chart, so I mean, these moves are massive that I'm trying to show. Moves up. Failure to take out this high. Still failure. It takes out this high though, which could mean it's either going to reject or it's going to go up. Takes out this high. Now this is 1, 2, 3, 4 candles away. That means it's a big pull, a big daily high. And if it took out this high, it would be going into this fair value gap. So I'm thinking it's building cells, and it's still building cells. What does it do? It goes down, takes out this liquidity, takes out that liquidity. And if you want to go day by day, creates a fair value gap here. Institutional entry drill. Just tags that fair value gap. And then immediate rejection. Takes out this low. But this low, taking this candle. I was watching this live. And I was like, well, that's a big pool of liquidity. It's going to at least go a little higher, right? And look what it did. It created a fair value gap. Let's just take everything off the chart for now. It created a fair value gap. So liquidity sweep, where's it going next? Liquidity or inefficiency? But we're weak because we sold a lot here, we sold a lot here, we sold a lot here. And in this range, we're building a consolidation range. So what you have to decide is how big is this range going to be. So I'm looking at this first creation of like, okay, maybe we're switching to sell. And I'm thinking, well, in order for these people to take profit, well, they already probably took profit and changed. But the people who bought here that expected it to go way higher, which probably wasn't a lot of people, maybe here after the massive gap opening, gap's way higher, and people are like, all right, time to buy, and they get swept here, and then they say, all right, maybe it's time to buy here, they get swept here, and that's when you actually want to enter. Get swept here by this, get swept one more time. You got to get like good at this stuff, at seeing like what we actually want to do, because it could have went down, tagged this liquidity one more time, ran up. But you're looking at this move. You're saying, well, that's a sizable move. After we took out this, we didn't create an up close candle. We stayed down. And it just kept taking daily high, daily high, daily high, daily high. And then this candle doesn't take daily high. It's moving up though. So what I'm thinking here is this will be a massive move up. Failure to take this. Well, I'm thinking, this is why I'm thinking it's a massive move up. Daily high swept, daily high swept, daily high swept, daily high swept. And this one fails to get there, which could mean weakness, or it could mean the next candle is just going to be a giant candle that takes out this entire range. So if you're buying, let's just say, I wish I could go into the 1 minute chart and show you. Let's just say there's a breaker. After this sweep, there's a breaker, and it tags that breaker. Then I'm looking for, this is going to be a turtle soup for me. This could have been a turtle soup for you. You could have took this liquidity, bought here, took profit on this daily high. and that would have made you a lot of money. But it turtle soups again. Now I'm looking for the big one to get taken out. Not just a simple daily high here. I'm looking for this to get taken out, maybe take some partials here, roll my stop loss up to break even. Then I'm looking for this high to get taken out. And it comes back down one last time. Because anyone that bought here, late buyers. Late. They missed the move. The move was here. They bought here, they get taken out. And then what's it do? It runs a lot. Where were we over here? Oh yeah, this liquidity sweep. So this liquidity got swept. Turtle soup. You're looking for an entry. You're looking for to get to this inefficiency. So I'm taking profit at that daily high if I'm scalping in the other direction. Because the liquidity sweeps mean that you're gonna probably run to future liquidity, like this liquidity sweep. If it didn't close up here, I'd be looking for it to close down here. Close here, next candle, down here, down here. This is a huge draw on liquidity. So when that gets taken out, what happens? Takes out with this candle, goes where? A breaker over here, but that's less important. Creates what? A suspension block. Now I'm looking for a way to get in here. A way where I can safely get in after all the liquidity's run. So I'm looking at this wick, and I'm looking at this gap. It's not created yet on this candle, but I'm looking at it as this is a gap. Until it closes below here, this is a gap. So I'd be looking for order block, fair value gap on one of these quadrants. Well, these quadrants weren't formed yet. Well, let's just say on this swing lows quadrants. So if there was a gap, a fair value gap, a breaker that lines up perfectly with one of these quadrants, I'd be looking for that to this short-term liquidity, to this short-term liquidity, and then to this short-term liquidity. And my idea was, well, it's not going to go up here yet. Why isn't it going to go up here yet? Because we're building a consolidation range. This is like a premium of premiums, if you want to call it that. Like, this isn't going to get taken out until massive move up. And before that move is going to be a massive move down to try to fake out everybody who thinks is going to go up there and take out these highs. But the people are buying, they're thinking, all right, we're going to make new all-time highs. I'm thinking this is consolidation. This is going to manipulate. Then it's going to expand. So you take that, you take profit here, take profit here, take profit on this one, not this one. This is an extreme though. Like that's getting close. Like I would just be tossing a contract on there just to be like, if it gets there, it gets there. If it doesn't, I'm at break even. I don't really care. And maybe trail it up. Like this is like a big move, but this is a big liquidity pool. So big moves happen after what? Big liquidity pools are taken out. It could have just ran this out and then went completely lower, but we wouldn't have seen a candle up here. I mean, yeah, you would have. You would have seen a candle up, maybe another candle up, So it's kind of hard to buy right there. But you could buy in this gap right here. But this wick, it's scary because you're thinking, okay, it failed to get here. It's going lower. But when in reality, it's just touching this wick, touching the midpoint of this wick over here. Wicks are gaps. So what's it do? It tries to go into that gap, hits the midpoint, rejects. So what can we expect? Goes through the gap, equal dealing range, offers sell side, doesn't offer buy side, and then here, buy side's offered. After you close above that, you don't want to see it go in the lower quadrant. And what's it do? It stays right above the lower quadrant. So you could have taken a breaker off one of these levels, a fair value gap off one of these levels, and you could have wrote it to this high. That's all you need. That's really all you need. And then we move up. Institutional order flow entry drill. This gap. What's this aiming for? What's this wick right here aiming for? Breaker. Or order block. What's this aiming for? Order block. But this is after that got taken out. So I wouldn't be trading this order block here. I'd be waiting for takeout, failure. Let's get close. Liquidity sweep, failure, and then what? Massive move down. This wick becomes premium wick. You're looking at everything inside this wick as a chance to sell, a chance to catch that sell move. Where are you going with it? Going to this suspension block. So you sell here, you take profit at this suspension block, and then you get a chance to buy. Buy where? Right at the 50% of that. Goes up. Into this gap. Lots of playing around in this gap. Sells off. Sells off. Now I like this because it just goes above that. It takes out all the sell stops or all the buy stops above those. Oops. Above those sell stops. And then it rejects. Rejects where? Back into the suspension block. And then remember that massive move down I was talking about before the massive move up? Goes right back into the suspension block. Takes out this liquidity. Goes into this fair value gap. And I know it doesn't. It closes above the fair value gap. So, breaker. Highest close candle. No bodies inside of it. So that could have been your influence, your ideas. That means weakness. Can't even close inside of that. And failure to get to there. So you sell. This is how I trade. I trade reversal points. And it's not the easiest. ICT trades continuations off of an already proved reversal point. But I'm trying to show you how it's possible to reverse these and predict. It's kind of hard in like a trending area. So consolidation, I'm trading reversal points. Trends, I'm trading continuations. A pullback into a fair value gap, and then an expansion. Pullback into a fair value gap, or pullback into, yeah, it's a fair value gap. I think it doesn't quite get there. So pull back into a breaker. This creates a new breaker. I'm not sure if that's a down close candle or not. It looks pretty black. So this is the new breaker. And look at that body. Closes right, or opens right above that. Probably goes down, messes around in it, and you're taking profit. This daily high, it's a swing high. Take profits at swing highs. This daily high, this daily high. And most of all, these daily highs. Because this is pre-consolidation. This is why I thought the market was going to do what it did. Because in past years, I've done the same thing. It went up, came down, consolidation, manipulates, and then goes lower. Comes up, creates high, consolidates, manipulates, goes lower. Comes up, makes a high, consolidates, manipulates, goes lower. So I'm looking at these equal lows, these equal lows. I'll get close. These equal lows. Well, that's not a good example. These equal lows. And this low here. Those are my two take profits for the year if I was in a daily trend. But right now, after this manipulation, clean move down. Just closes past that that suspension block, and it fails to get below here. I also forgot to mention, this is not trade advice. I'm not telling you to take a trade. This is simply me reading price action and trying to teach price action. But this is just a mess. It's seek and destroy. Liquidity, liquidity, seek, destroy, seek, destroy, liquidity, seek, destroy. But this is a big liquidity pool it took out. So I was expecting that type of move. And where's it go? Suspension block. Just goes to inefficiencies or liquidity. Can't quite make it to the 50%. Makes it to the 50% here, which shows you it's more bullish here than here. Rejection below the 50%. Breakdown. I don't even want to see it. Return up into this. I'll be looking at this gap and this gap. If we close above that, this is like the last line in the sand. If we go above here, my bias kind of switches to bullish. But if we stay below these two gaps, I'm bearish. I'm bearish until we get to these two. And that's leg one. I mean, if we get to those two, there's going to be a leg 2. So messy leg 1, which means leg 2 is going to be real smooth and fast. So that's what I'm looking forward to. Alright, I think I'm going to wrap it up for today. Appreciate you guys for watching. Have a nice week. Good luck. Talk to you guys soon.